Hello and a warm welcome to this brand new episode of South Central, our first one in 2026. My name is Jude Sanath, and from all of us here at ET Now and the team at South Central, here's wishing you and all your loved ones a very happy new year. There's a whole lot to look forward to over the next 12 months, and we at South Central couldn't be more excited to bring you key news and updates from the 5 southern states this year. On that note, let's take a look at everything making headlines at this hour. 2026 could see healthy residential sales pan India, but a grade A supply glut in cities like Chennai may push GCC-driven office deals into Tier-2 markets like Coimbatore. That's the word coming in from JLL on South Central's 2026 outlook for real estate. Chennai-based real estate developer Casa Grande files DRHP for a 1,220 crore rupee IPO. Offer comprises fresh issue of equity shares worth 1,200 crore rupees and a much smaller OFS of just 20 crore rupees by its promoters. Telangana secured 22,000 crore rupees worth of investments in the tourism sector through 2025, says the state government, as it targets 90,000 jobs in this sector over the next 5 years. Karnataka suspended 5,947 driving licenses last year for traffic violations. Urban Bengaluru tops the list with 4,479 licenses suspended. Drunk driving tops traffic violation list with 4,735 cases filed. And in Hyderabad, the city police books over 2,700 motorists for drunk driving on New Year's Eve. However, celebrations end with no drunk driving related incidents in the city. Well, our first story of the new year: expect healthy residential sales pan India through 2026, but a supply glut in grade A office spaces in and around Chennai may push office deals Coimbatore's way. That's the word coming in from JLL's head of residential services, Sivakrishnan, as we sat down for South Central's first chat of 2026. Siva also said that the multiple rate cuts by the RBI in 2025 could play a key role in keeping residential sales traction healthy, which could well boost the first-time homebuyer segment. Here's a slice of that conversation.
So first of all, Happy New Year, Jude, and all the viewers for happy and prosperous 2026. Real estate sector wrapped up 2025 in a strong and resilient note. All cylinders firing, be it office sector, be it industrial, be it residential. Post-COVID, we have not seen any sign of abatement. Across the board, we are seeing phenomenal growth, robust absorption, whether it's office. If you look at it, office fueled by GCCs, BFSI, from a 70 plus million absorption across India, we'll be closing close to about 80 million. I'm talking about 70 million year 2024, 25 will be closing close to about 80 plus million. Let's take industrial. Industrial was close to about 48 to 50 million in year 2024. This year we'll see close to about 55 to 57 million. Estimates are there, and the numbers are yet to come out, the final numbers, but we expect the numbers to close to about 56 to 57 million. Then comes the residential sector. Residential sector, if you look at it, last year we closed close to about 300,000 plus units. This year will be closing close to about 290,000 units. It's marginal decline, but I will not call it as a decline, considering the fact that there was a quantum jump in terms of the sales for last 4 years, with the sales price going up by at least by 30-40% across micro markets. I don't see any signs of slowing down in the market. What we've seen in last 3 to 4 years is consumer confidence coming back, the luxury and the premium segment firing, the ITs, the office absorption, especially fueled by the GCC, all driving the residential real estate sector. So it's been a great year, 2025, for the Indian real estate market.
Right. So what do you think 2026 will hold insofar as, we'll start with residential, of course. I think in 2025, a large part of the volumes that were driven in the residential space were in South India itself, Bengaluru, Chennai, Hyderabad, all really sat and drove the real estate sale engines for the residential sector. Do you see this continuing in the new year? And if yes, to what extent in South India?
So if you look at from the total sales volume, the South contributes close to about 40-50% of the sales volume across the segments, whether it's Hyderabad, Chennai and Bangalore put together. Bangalore contributing close to about 65 to 70,000 units, Chennai close to about 20,000 units, and around 50 to 60,000 units coming from Hyderabad. This is a typical number across board for these three cities. Look at from a holistic picture. The end users are back in the market, fueled by the premium housing. So from a 50 lakhs to a crore, we spoke last time, from 50 lakhs to 1 crore, the contribution of 1 to 3 crores have really fueled to close to about 50 to 60%. And that's what we've seen in last 3 years. And this is, as I said, fueled by GCC growth, office absorption. Also look at the RBI. RBI intervening last year 4 times with the borrowing cost coming down by almost by 125 basis points. This will have a great impact as far as the sustenance of the sales velocity is concerned. So this will continue for the year 2026 also. What I feel is that with the interest rates softening and inflation at check, I don't think the interest rates will really move up in next 3 to 4 quarters. I have a strong feeling that the mid segment will come back.
Right.
And that's the bottom of the pyramid, which is the much needed one. And that will further fuel the volumes. And I'm sure developers will come back to the drawing board and look at that segment very closely for the year 2026 and 27. That segment, which was gone on a silent mode, will come back in the year 26 and 27.
Right.
And that's what we'll see.
Let's stick with that then. The mid-segment you see as the most promising one in the new year itself. And we'll come to commercial and office space in just a bit. But in sticking with the mid-segment itself, and like you rightly said, with the RBI interventions and the interest rate cuts, you could see a lot of positivity in this space. So in this year, if it isn't too premature to ask, what percentage of overall sales do you feel the mid-segment will account for in South India?
So if you look at it, the overall, the mid-segment is currently hovering around 18 to 20%. And that will touch close to about at least double, 28 to 30% is what my gut feel for the year 26 and 27. Primarily because the fact that the affordability comes in terms of ease of paying the EMIs at the end of the day. With the RBI cutting the rates, I strongly believe this market will trigger and you will see a much needed, much required momentum happening in the segment, which is very important from an economy as well as the real estate sector is concerned.
Right. And the 3 big South Indian markets, Bengaluru, Hyderabad and Chennai, do you see them continuing to account for a large chunk of these sales in the new year?
Absolutely. Because if you take Chennai, Bangalore and Hyderabad, what fuels the residential market? It's the ITITS sector. And fueled by the office absorption. If you look at from that perspective, the ITITS segment has an affordability of close to about, say, with a combined income of close to about 70-80 lakhs is the sweet spot they like. And with the interest rates abating, you will see this market coming back. So I strongly believe this is the market to watch out. And if this comes back again strongly, this will further fill up the whole sales velocity and sales momentum for the residential sector.
Right. You know, moving forward itself, insofar as the premium to luxury sector is concerned, like you said, you know, even in earlier conversations, they had resurrected that sector and has accounted for a large part of the kind of high velocity sales that you were seeing pan-India, more so in a city like Bengaluru as well, especially in the premium to luxury segment. Do you see this continuing to hold its own? And if we're talking South India, I'm sure Bengaluru, more than other markets, you would reckon, what becomes of this sector in the new year?
In fact, I don't know whether I spoke last time, the market has moved from a rate sensitivity to a space sensitivity, that customers are looking more towards space, less towards rates. And that's why, despite the fact that the velocity, despite the fact that the rates went up, the prices went up in all the micro markets across the south, we didn't see any the volumes coming down.
Right.
And that's one of the reasons in the last 3 years, the continued momentum in terms of the housing sector is concerned. Now with the rates coming down, and which will fuel the growth for the mid segment, this will add to the whole sector itself. And that's my feeling in terms of the whole residential sector, because holistically, this one segment needs to trigger for the consistency and sustain the momentum for a period of next 3 to 4 years' time.
Right. Before we move to office space, I just want to touch upon a little bit on the RBI interventions, like you mentioned a little earlier in the day. Multiple rate cuts in 2025. The projection, of course, is that for the next 3 to 4 quarters, these rates would more or less stay stable. How much of a factor do you feel this will play insofar as new buyers are concerned and new homeowners are concerned? The first-time home buyer is always a very interesting demographic for any real estate player. Do you feel a lot more first-timers will now enter the fray insofar as capitalizing on these rate cuts and making good on attractive borrowing rates to venture into home buying?
Very interesting question. In fact, post-COVID, we saw customers upgrading themselves from 2 BHK to 3 BHK, 3 BHK to larger 3 BHKs and 4 BHKs. Because, as I said, it was more towards space sensitivity, less of rate sensitivity. With the rates coming down, especially the borrowing rates, you will see this segment coming back, and you will see more of 2 BHKs and a conservative 3 BHK coming back to the market. And that's what we will see in next 2 to 3 years' time.
And this will be the case even in the 3 big South Indian markets, you reckon?
Absolutely. And that's the segment to watch out.
Right. Let's move to office space now. I think the big headline of 2025 as far as India's office space markets are concerned is that Bengaluru, Hyderabad and Chennai together accounted for nearly 50% of volumes that year, driven largely by GCCs, one would reckon, but the IT, ITES and BFSI sectors continue to fire on all cylinders. What is your projection for the office space market in the new year in South India?
So if you look at if you split all the 3 markets, Chennai contributes close to about 10 to 10.5 million square feet in a year. Bangalore will be closing about 22 million for the year 2025. Hyderabad will be close to about 11 to 12 million. So that's what I said. The 3 South Indian markets contributes close to about 48 to 50% of the total absorption for the year 2025. And with GCCs strongly accounting for the whole absorption, this momentum is expected to continue with backing from manufacturing BFSI. We expect the momentum to continue, but the only concern that we are seeing is the supply. Take Chennai. The grade A vacancy levels have come down to close to about 7 to 8%. That's the only worry that we have in terms of the absorption is concerned. We will see the market moving towards a pre-commitment in some of the micro markets, especially Chennai, Bangalore and Hyderabad, because of the lack of supply in some of the micro markets which is wanted. But the absorption will continue, and not only from the metro perspective, but also in Tier 2 city. The city to watch out in Tamil Nadu is Coimbatore. Coimbatore, if you look at it from a post-COVID, pre-COVID, if you look at it from a Coimbatore absorption, which used to hold around about 1.42 lakhs, it touched almost 1 million square feet a year back. And last year, there was a slight slowdown only because of supply scenario. And with the supply coming back to the market in Coimbatore, you'll see Tier 2 cities also progressing well in next 2 to 3 years' time.
What you're saying is very interesting, Siva. So, and correct me if I'm wrong. Is this a case of correlation or causation? You're seeing a dearth of grade A office spaces in Chennai on the supply side, and at the same time, you're banking big on Coimbatore. Is this a case of Chennai's loss or lack of grade A spaces being a case of Tier 2 markets gain?
I think it's a good story which is evolving. The distribution is happening even Stevens, whether it's Tier 2 as well as metros are concerned. Post-COVID, what we saw was the corporates moving towards talent to the Tier 2 cities. And the talent also moved back to the Tier 2 cities because of the lockdown and other aspects. Work from home was an important aspect during that time. So some of these, the talent moved back to Tier 2 cities. And the Tier 2 cities also provided very well-rounded kind of infrastructure. I'm talking about the social infra, whether it's schooling, hospitals, the work-life balance. It created a great balance for the employees.
Right.
And that's why and the attrition rates. If you look at the attrition rates, the attrition levels in a Tier 2 cities is far lower than what you see in metros.
Right.
And the resistance of the talent saying that I will not go from a Tier 1 city to Tier 2 city was something broken during the COVID time. And that's one of the reasons we saw the absorption going up in the Tier 2 cities. This will continue as we move forward, because in last 4-5 years, the social infra further doubled. Whether it's schools, the international schools are going to Tier 2 cities, the hospitals are going to Tier 2 cities. So they like that work-life balance. plus the corporates moving towards the Tier 2 cities. So this will continue with the absorption happening also from an office perspective, both in metro as well as in Tier 2 city.
Right. So Coimbatore is one Tier 2 city you're banking
Absolutely,
big on.
Stand out.
Which others do you feel could be in the reckoning?
So any Tier 2 city, for example, look at Indore, look at Nasik, look at Lucknow, look at Mysore. But among all the Tier 2 cities, what is really standing out today is Coimbatore.
Right, absolutely. And I think that's no doubt, a big bet given the fact that Coimbatore has always aspired to be just a bit more and do a bit more on all fronts. Is the Tier 2, is the office space supply glut something that is unique to Chennai alone insofar as the South Indian markets are concerned? Do you see similar issues also in Hyderabad and Bengaluru in South India, or do you feel the supply situation might be relatively a little better placed in these two big office markets?
I see it's a generic phenomenon across all cities. It's primarily because of the fact that the absorption really picked up in the last 3-4 years. And during the COVID time, there was a slowdown in the construction. It also added to the woes of supply coming back to the cities. This will get resolved in next 18 to 24 months' time with a lot of focus on supply coming back to all the cities. So it's not a problem only pertaining to a specific city.
Right. So moving forward then, what is the projection like for absorption in 2026 in the big South Indian markets? Do you see that momentum continuing? Do you see some sort of a consolidation? What is your projection on the absorption front?
I don't see any change in any of these fundamentals for the year 2026, be it residential, be it as office, be it as industrial, or alternative asset class, or data center. I don't see any kind of slowdown happening. This will continue. The only one thing which I can say is that the prices are not going to come down. Reason being, we discussed again last conversation, the land prices, the way the developers have picked up the pricing for land is very high. And with that in consideration, the prices will not come down, but the velocity will continue to sustain because all the factors that we discussed.
In fact, Siva, you preempted my next question. You say prices are not going to come down anywhere. What does that do to the deals front? Do you see land deals continuing? Do you see some sort of reticence from buyers itself? If prices are not going anywhere, where is the incentive really?
Honestly speaking, I think developers will do a wait and watch mode from a land buying is concerned for next at least for 7 to 8 months time. They will look at relevant supply, relevant location before they jump in.
Right. But as a real estate consultant itself, where is the best land bank available? I know for a fact that all developers are flocking to the south, in a sense. The numbers, at least in 2025, made that amply clear. But do give us a tip or two. Where is the best land?
So I'll tell you, typically what we've seen is that wherever there is an ITS absorption happening, especially look at Chennai as an example, where is the best traction happening? One, a micro market which is doing extremely well is OMR. It's fueled because of ITS, because the affordability in terms of buying only comes from ITS. The next micro market is your Mount Punamali High Road, again fueled by ITS. These two micro markets will continue to run the momentum for coming years. It's not that manufacturing is not driving growth. The affordability factor today from a manufacturing side is still lower. So that's one of the reasons. So I'm only taking Chennai as an example because see GST. GST is a phenomenal corridor. We have got rail connectivity, you've got transport, you've got decent ITS, but still it's not thriving because of the absorption that we see from an office front is concerned.
Right.
It contributes roughly 4 to 5% of the overall office consumption for the year any year for that matter. So that's one of the relevant factors which will drive the housing. So whether it's Chennai, Hyderabad, Bangalore, wherever there's an ITS office absorption, you will see the housing sector consumption on a higher side.
Sticking with news from the real estate space, Chennai-based real estate major Casa Grande Premier Builder LLP has refiled its draft red herring prospectus or DRHP with the Securities and Exchange Board of India or SEBI to raise about 1,220 crore rupees via an initial public offering. The offer comprises a 1,200 crore rupee fresh issue of equity shares and a much smaller 20 crore rupee offer for sale by existing promoters Arun MN and Casa Grande Luxor Private Limited. The company plans to use a large portion of the proceeds to repay outstanding debt and the rest for general corporate purposes, strengthening its balance sheet as it prepares for a potential listing. Casa Grande, headquartered in Chennai, was founded in 2003 and is one of the largest residential developers in South India. with a strong presence in Chennai, Bengaluru, Hyderabad and Coimbatore. It has completed over 100 residential projects and has a sizable ongoing and upcoming pipeline catering mainly to mid-range and premium segment housing. Staying with real estate news from Chennai, while residential property volumes across India's top 7 cities fell by about 14% last year, Chennai sales climbed to roughly 22,180 units from just 19,220 units in 2024, making it the only major metro to record growth according to data from Anarock. Now, experts say the city's resilience stems from an end-use driven market, relatively stable prices and a steady pipeline of mid-income housing, keeping homes within reach of salaried buyers. This even as other markets see buyers step back amid rising costs and economic uncertainty. Chennai also saw a 30% surge in new launches with about 27,190 units introduced, most prices below 2.5 crore rupees, thereby underscoring sustained developer confidence. For context, major cities like Mumbai, Pune, Hyderabad and Bengaluru all reported double-digit declines in sales, highlighting Chennai's standout performance in a softening national real estate cycle. Meanwhile, Telangana secured a whopping 22,324 crore rupees by way of investment in the state's tourism sector, the government has said. A large part of this investment, that's over 15,000 crore rupees, came by way of the state's tourism conclave last year, with the Rising Telangana Global Summit accounting for over 7,000 crore rupees in investments. Unveiling the state's tourism policy for 2025 to 2030, the Telangana government added that its medium-term objective was to generate close to 90,000 jobs in the sector over the next 5 years. It hopes to do this through flagship events like hot air balloon festivals, drone shows, and an international kite festival scheduled to be held later this year. Shifting focus to Karnataka now, the state has suspended 5,947 driving licenses through all of 2025, of which 4,735 licenses were suspended owing to offences like drunk driving. The urban Bengaluru region led the state with 4,479 license suspensions, mostly tied to a drink and drive offence, as the Transport Department stepped up enforcement throughout the year. About 1,512 suspension cases are still pending action with the RTOs, so expect a lot more suspensions probably as the new year progresses. The crackdown now reflects a stricter stance on road safety, with first offence drunk driving leading to immediate license suspension for 3 to 6 months. Meanwhile, the Hyderabad police has booked over 2,730 motorists for drunk driving across the city on New Year's Eve as part of an intensive sobriety drive to keep roads safe during the celebrations. Now, traffic teams manned key junctions and have conducted widespread breathalyzer checks while cracking down on these offenders. The enforcement push came amid a broader zero-tolerance warning from Police Commissioner VC Sajanar, who ordered special checks at over 100 locations and urged New Year's Eve revelers to avoid drinking or avoid driving rather after a drink. Significantly, the city saw no drunk driving incidents on New Year's Eve, thereby validating the awareness and enforcement drives carried out by the city police. Shifting focus to Andhra Pradesh now, the state will convene its first cabinet meeting for the new year on the 8th of January. Chief Minister Chandrababu Naidu and his cabinet of ministers will meet to take stock of a few critical issues. On the agenda is education, roads, transport and investment promotion. The Naidu cabinet is expected to approve new projects and make appointments on the basis of proposals from each state department. The state cabinet itself will also review schemes implemented in 2025 and make plans for future investments and infrastructure development. Now, with multiple cases of avian influenza or bird flu confirmed in poultry stock within Kerala's Alappuzha and Kottayam districts, authorities in Tamil Nadu have intensified checks along the Kerala border, especially in districts like the Nilgiris and Coimbatore, to prevent the virus from spreading into the state. Now, checkposts are already in place and the transport of live poultry, eggs and related materials from Kerala has been temporarily banned as a precaution. Poultry farmers in districts like Namakkal have also tightened biosecurity measures, including vaccination, restricted vehicle entry, and disinfection steps to protect flocks, given the region's large egg-producing base. And with that, it's a wrap on this New Year episode of South Central. Thanks so much for watching. Hope you have a happy and prosperous 2026 as you keep watching ET Now for more news and market updates. For the moment, it's goodbye from us.
In